Good morning, everybody. It's Dave Fry, ETF Digest with an ETF in focus. We're taking a look at China via GXC, and we're going to look at it primarily on a weekly chart because the daily chart is much too erratic, and we'll show that right now. So here's the daily chart of GXC. And what I would read into this is nothing, and it's just too erratic, and it's not worth getting involved with unless you're determined to be long or just don't care about it. But you need to find some methodology, get involved with it, and you can see once again we are weaker today. This leaves us with the weekly chart view once again. You can see that this chart is annotated by an RSI, proprietary MACD histogram moving average, which is now turning down, our proprietary HIs, which are highs, and LO for lows, two distinct moving averages, a money flow index, and so forth. If you'll note, these HIs here, with this HI here, November this past year, you can see that it was effective for a short period of time, but overall, when we look up here, we like to see the RSI moving higher and at a high level, say above 70, to make a move out of it, out of the security, valid. Even then, you can see on this chart, it did decline. Then we got up here to this HI, this high, and you can see that at that point, we were at an overbought level, makes the HI reading, the high reading, more valid and impressive, making you want to get out and or short. And here is the converse of that, the reverse of that rather, is the LO low. And from that, we were able to exit the position, and that therefore, within 2 weeks or 1 week of the exit, you can see that we rallied up and then came back down, and we haven't had a real good HI since then. With this exit, we are back to where we were right now, back at the 75 level, which is where we would have exited here. So we just got rid of all this chop and this negativity, and we missed this part of the rally, but that's okay. Sometimes you just avoid it. We have no position in GXC at this time. A key factor in the weakness, current weakness of GXC, happens to be the Chinese government, which has been trying to rein in credit, even as they injected some liquidity into the markets this last week, and yet at the same time, banks are reluctant to lend, creating a cash squeeze on borrowers, leading to a decline. All right, that's it. If you're interested in this or other ETFs we cover, take a free trial at the etfdigest.com. Thanks for watching. We'll see you this afternoon with Dave's Daily.